My friends, what is going on? I wanted to jump in here and give you guys a quick technical update on what I'm looking for on GameStop. Before we get started, you guys know the deal. Nothing's financial advice. I am a technical trader, and that's the perspective that I'm going to provide is going to be from a technical standpoint. There is a lot of speculation as of right now going on with Roaring Kitty's position and what's he doing with his June 20 calls. There was a lot of 20 calls that were sold off today. I might talk a little bit about it and kind of speculate it from a standpoint of if he does this is what I think the chart might go to. But the reality is you and me and everybody else, we don't know, right? We won't know till probably tomorrow morning, or obviously if anything happens from him updating his position. Also, I believe tomorrow morning there is the GameStop shareholder meeting, so that could provide some more information as well. But overall, I just kind of want to talk about some of what I think are going to be the most likely paths. I don't want to try to rehash too much from my previous video, so if you haven't watched that video, please go do so. It's going to be a little bit more in depth and in detail, but literally every second that the market is open, we're always getting new information. And so as we get that new information, you have to be willing to update your thoughts and your thesis and your levels based on that information that's coming out, rapid fire. So that's essentially what I want to do is I talked about a lot of different paths that I think GameStop could potentially take, and I just want to go, okay, with the price action that we're getting, here's going to be the most likely path from that. But let's start by just kind of taking a look at the weekly chart. I tweeted this out, nothing like a little bad price action to get everybody up in their feelings and their emotions, and just, I don't know. Yesterday was a party, and today it felt like nothing but hostility. So, and I'm not talking to everybody, of course, but I know both myself and Bronx Switch. If you haven't done so already, please follow both of us on Twitter. Mine is Colin_Gladman, and he is at the Bronx Viking, I believe is what it is. But anyway, make sure you follow him. He's posting a lot of flow updates. He was the one talking about how potentially this is Roaring Kitty either closing out, rolling, selling part of his position. And like I said, we'll have more information tomorrow morning. But first and foremost, from a technical standpoint, the chart from a weekly basis is still looking good as of right now. The reality is I talked about last time, tons of support, tons of resistance. Now we're starting to use this area over here in the low 20s as support. We want to continue to see that as of today. If we go down here on a daily basis, yesterday we had a really nice bullish engulfing candle. We did make a higher high today. However, just between while Powell was talking, FOMC, and then of course potentially the unloading position of Roaring Kitty, then we saw a sell-off. I really wanted 30 to hold today. Unfortunately, that did not happen, once again with all the option activity that was going on. But overall, if we'll look here, we're still caught a wick up here towards the end of the day. Right now, as I'm making this video, last I checked, GameStop was chilling right around 26 something. Yeah, so it's 26.30 in after hours Robinhood trading, that's going on right now. Take that with a grain of salt. But what it's just good to see is it's good to see demand in this area. If we start slicing through this area, then that's when I would be a little bit more concerned about that sweep that I talked about, and we'll go ahead and talk about it again. But having said that, tomorrow, what we're going to be looking for is we certainly want to see a close over 30. Typically, though, we've seen a lot of these big events that happen during market hours. They turn into sell the news events. So I am going into tomorrow with more of a mindset of going and preparing for I'm going to see more downside before I see any type of upside. If these levels in here hold, even with, if we get bad sell the news or Roaring Kitty's, closed out his position. So at the end of the day, he's either going to sell his position, he's going to roll his position, he's going to sell some of his position and exercise the rest. And like I said, we just don't know that. So, racking your brain about it, all you're going to do is drive yourself crazy, right? So Let's wait till we get some of that information. My personal opinion is I think the best thing that we could see is him sell enough of his calls, hopefully that he was doing that today, to then turn around, buy a whole bunch more shares. There's also been a lot of option activity on the July 19th 50 chain, so that's going to be something. If he updates that he's rolled a large part of his position to July, that will be good. So like I said, we'll wait and see what that looks like. Because what he's essentially done with his incredibly large position is he kind of has created a floor in here. And even though, yes, he's been diluted on just like all of us have, he kind of created an artificial floor. If he creates that artificial floor and it allow GameStop to, continually to raise money, and if that floor keeps getting higher and higher and higher, he keeps rolling his position out more and more and more and more, then, GameStop's really going to be a force to be reckoned with. But if I haven't said it already, that is speculation. All right. So what we want to see is, let me get down here to the hourly basis now. So here's what I talked about in last video. Just going to do a quick rehash. Okay. I said anytime you catch these internal, this is a very classic liquidity sweep. Now, while I still think there's potentially more downside ahead, this is a very bullish setup. Okay, and like I said, I'll walk you through it. So typically what you have is you have these internal double tops, then you'll typically have a setup like right here. It's following a trend line, right? Sorry, let me get it lined up here a little bit better. So you have a setup like this where you have trend line traders that's trading the trend line. Then you take a big liquidity sweep up here at this 47 level. Then you get the breakdown. You start, and I'm sorry, let me back up here. What this setup is all about is it's all about the most effective way to capture as much liquidity as possible. I've tweeted it a couple different times, but the market is most likely to move once all stops have been taken out. So the people who shorted in here at this double top, they got taken out back up here whenever it squeezed and it pushed up here on that past Friday. Then what happens is we get that dilution news. We start to tumble. You've got trend line traders who are entering long positions here. Now you've got trend line traders that are entering short positions. Comes back up, retests this trend line here almost perfectly, starts to dump out. Now, most people are going to be setting targets on this right here of at least the 618 around the 20, anywhere between that 20 all the way down. And I don't know that I think it's a coincidence that this, one extension pretty much lines up perfectly. This red line here is the 200-day moving average, and that is on a daily basis. Now, what have I also talked about many times before is the most likely outcome is screw the most people. So I would be surprised if we made it this far down, because that's the obvious spot to go long. Usually what's going to happen is you're going to get close to that area, and then it's going to leave without the orders being filled that want to go long. So we have this trend line rejection right here. So what I would be looking for, and honestly what I would like to see is, and this isn't going to be popular, but I'd like to see a little bit more fear and panic. I would like to see a sweep of this area. We still have a gap right down here that has not been filled, and we still have a gap right here that has not been filled. So between 1906 and 1750 is kind of the range that I would be looking for a move that essentially, let me back up. Sorry guys, I just got done after obviously a very long day and working out and everything like that. So I apologize in advance. I'm all over the place, and I know that. But the internal double top right here, you sweep it here. Now that the highs have been swept, the people that were here got stopped out. Trend line traders have gotten stopped out. Now you've got people who are re-entering puts on the retest of the trend line. Now we start pushing down. We come down here. All these people, so anybody who's got stops in here, in here, in here, in my opinion, this is the largest liquidity pool, but I think you just barely tap into that. Before then, you probably get a pretty violent move outward from here. And you can see how that would essentially create a massive W slash double bottom look right here. So that's going to be my most short-term bearish case, but long-term bullish case. Because the more momentum that you gather, the more stops that get taken out, the more liquidity that gets sucked up, then the bigger the move can be after that. I already said in the last video that if we do get this liquidity sweep, that it would be news driven, right? Go check it out if you haven't done so already. But this move would be news driven, right? So if the news to get this liquidity sweep is that Roaring Kitty is closing out his position and we get peak fear and panic, and then don't be surprised when all of a sudden he goes, oh yeah, I rolled my position, or hey, I bought a whole lot more shares. If he did sell out of a large portion of his position and then he buys a whole bunch more shares down here in the 17 area, I mean, this thing, as conservative as I can be about it, this thing will absolutely rocket at this point in time. So while that would be a lot more short-term pain, it would give fuel for a lot more long-term gain. So in reality is that's life sometimes, right? If I want to get in better shape, I've got to go through some short-term pain of working out and eating better and ignoring my cravings of I love pizza and junk food and stuff like that. So I have to go through that, but it's way better for me in the long term. So is it bullish to have this move that's a big liquidity sweep and then get out of here? Absolutely it is. It's the most short term, piss everybody off, get people closing out of positions, get people taking losses on calls, and then they just go, okay, well, I'll wait for the gap to fill all the way down here, and then before it even has a chance, once again, it'll be some type of news will just justify the move, just like I always talk about. All right. So now let's also look at a different option. Another option is we've seen our bottom. We just came down here. We tapped into a little bit more demand. I don't hate this look right here. I was kind of working on the chart earlier. It's kind of a falling wedge look right here. So I think this is a very valid look right in here. If I turn on, I'm going to turn on extended hours. So this right here was the look that I was talking about on Twitter earlier today. So we had a nice double bottom, kind of building out an inverse head and shoulder look. And then, like I said, I liked this move right here. This is where I tweeted that we swept these highs, and now this candle swept this low. So if this candle basically would have been a topside move instead of a downside move, like if it would have closed over a 35, then I would feel very good about a push towards 40. Obviously, we didn't get that close here, and then this price target very well moving up here. So like right around 39 was going to be my price target from this inverse head and shoulder move. Now, going back to liquidity sweeps, very common. What you will see in these type of inverse head and shoulders is so let me draw all this out for you real quick. So obviously, an inverse head and shoulder, you have a shoulder, you have a head, you got a neckline, and this is what all your schematics are going to look like, right? But it's just, every now and then they'll play out picture perfect, but the reality is like anything else, it's going to be typically, a little bit more wonky. But what you will see is on these shoulders in the head, you see this move right here, okay? Where that right shoulder dips down a little bit more, pretty much between the left shoulder and the right head. And why does it do that? Because there's a lot of people who, once again, going back to liquidity, there's a lot of people who are willing to enter long right here at the second shoulder test for obviously that push upwards. So what happens is you get people who are wanting to go long right here. You get them trapped by this move or even stopped out by this move. Going back to what I've been talking about a ton, right? Those liquidity grabs. And then when it fails, you have people wanting to go short right in here, and essentially they're going to go, okay, and I'll get out at the double bottom look, and then you come right back in here. It's usually a typically deep retrace, right around that 786 to golden pocket. Look at that, almost drew it perfectly. And then you get the move that comes up and out of here. So if we look at this move, what would you look at that? Bounced right off the 786. So pre-market tomorrow or anytime overnight, a Roaring Kitty comes out, talks about his position, does an updated position. Don't be surprised if the people who capitulated here at the end of the day, they get screwed and the move starts to happen. Now, with something like this, we're going to be looking at where this move then would play out for me is right around kind of that 36 ballpark. Now, a 36 is a good spot to start going, and I mean, and you can see, right? It's no secret the way these line up. Look at that. So support back over in here in extended hours, support back over in here, support, resistance in regular trading hours. So if we get this move that comes back up towards the 36, then don't be surprised if we then roll back over. This is your neckline test back towards 32, and then you get continuation at that point in time. So from a short-term bullish standpoint, that would be the most likely move from there. And once again, it would be nice if it just bounces perfectly right here at this 32 area. But if we this next time approaching it, we blast through the 32, push up towards anywhere between that 36 to 40, then we curl back over, retest that neckline, then we can go again at that point. So what would be nice is whether it's Roaring Kitty updates his position, just at the open, regular trading hours, we get a nice push. I think, and I'm sorry guys, I might be inaccurate here, but I want to say that the GME shareholder meeting is around like 10 or 11 a.m. and I'm not sure what time zone, but if we can push up here and then the shareholder meeting happens and then that brings us back for our test around 32, then we can start to push up again at that point in time. So that is the most short-term bullish situation. So that's what I'm looking for. An ideal scenario. The biggest momentum getter is going to be that liquidity sweep that I talked about down into anywhere between 19 to 1750. None of that would surprise me in any way, shape, or form. That's going to be our most bullish setup for the long term, but that creates short-term pain. If you have a bunch of June 21 calls, then obviously you want to see what I just talked about. And I posted on Twitter, this is where you want to see the bounce, right? Right when we came down here, right when we came down here and we're in this previous fair value gap area, I was like, this is where you want to see the bounce. And we whipped up a little bit, but now in after hours, it's curling up. So most short-term bullish case scenario is this is still a valid inverse head and shoulders. It's just going to be a little uglier like what I laid out. The most powerful bullish thing is going to be the liquidity sweep. I think we will see that if Roaring Kitty stays quiet or it's obvious he closed out a portion of his position but not really updating, if he's in those July calls. And like I said, this is all speculation. I want to be perfectly clear on that. But if he's silent, if we don't have information, that's our most likely scenario for a bleed out. If we bleed out or for some reason we even gap down and it's just a harsh sell-off into the GME shareholder meeting, then it could be potentially that, Ryan Cohen is, increasing his stake in the company with the new dilution news. He can do that. So there's lots of still potential catalysts out there for the upside. So you do what's best for you, yourself, your family, and your portfolio. But if we see this type of move, we see this type of liquidity sweep, I personally, and this will help make all those kinds of calls cheaper, I personally will be looking at some July calls for sure. Might even take a stab at those July 50s because they'll be way cheaper than where Roaring Kitty was able to get in them at. So best case scenario is, or excuse me, from a long-term standpoint, the largest momentum gatherer is a sweep that pisses everybody off. The most happy thing is going to be, this is just that lower inverse head and shoulder that I just showed you, where, and you can see here, right, it didn't take out the people anybody that got down in here at the 23. It was great to see this big strong bounce at the 23, but it did get low enough that it took these people out, right? It doesn't have to be long. I'll pull NVIDIA up. Come on, TradingView, get your crap together, fix that candle. But when NVIDIA, this is daily, yeah, right here. So when NVIDIA, it's a perfect example, guys. Sorry, already going way longer. So this was the perfect example. Everybody thought this was a head and shoulder. And I think I even tweeted about it, right? It's definitely on watch. It's a perfect example of, and this was this was the day that NVIDIA swept 400 back down into 300, right? So everybody that was up in here, all these stops got taken out. Once all the stops got taken out low, then it had to push high. Once all the stops up high got taken out, look, just peaks above. Then what happens? Then you get a massive downturn again. But really, all it was turning into an ascending triangle, and boom. This is a perfect schematic for reaccumulation, but taking all the stops out before you have the opportunity to move. Okay? And this is on a daily chart. And what happened is this thing consolidated so long, and once it took out all of its stops,